Good morning, good afternoon, good evening, traders. Wherever you are in the world, I hope you're safe, I hope you're healthy, I hope you have a big smile on your face, and I hope you're catching pips as usual. Pips of Persia here. In this video, we're going to be breaking down a trade that we have taken on AUDCAD, which was a trade executed last week and now currently is floating at a 1 to 130 risk to reward ratio trade. So there's going to be a lot of important information shared about where this analysis started and how did we come to a conclusion to take one trade with a 1.3 pip stop loss that goes to over 1 to 100 risk to reward ratio. So if you like this video and the other videos that we have posted in regards to these this style of analysis when it's kind of smart money and Wyckoff, then make sure to subscribe to the channel to get a notification whenever I post a new video, and make sure to go on my Instagram and ask me any question you may have, and definitely show me some of the similar trades that you have managed to find or your progress in trading. Feel free to reach out to me on my Instagram being at PipsOfPersia. But let's jump straight into it. Before I actually start the breakdown on this specific currency pair, I want to speak a little bit about trading psychology, and that's what I have written over here, right? What do I, in brackets, want to see versus what does the markets actually show you? What do the markets show you versus what you want to see? This is going to be a very huge topic, and I'm not going to speak too much about this, but what I'm going to add to this is going to be ego. And here's what I'm gonna say in regards to this matter. The difference between what you see in the market, or more so what you want to see in the market, versus what does the market actually show you, in my opinion, is just ego. There's a lot of traders around the world that as soon as you catch one or two trades or win a couple of trades, you feel like you're the master and you have beaten foreign exchange, and you get very egotistic. And instead of you seeing what the market is providing you, what is the market telling you, you will force your analysis to, suit whatever directional bias you want the market to have. So you want the market to go up, and all of a sudden you're forcing your analysis for it to say that it's going to go up. So what I'm trying to say is a big part of trading in general, not even just trading these concepts, is not what you want to see in the market. Is not you boxing up a certain consolidation and hoping for it to be accumulation or distribution, and therefore you want it, for example, to go up. It's more so what the market is actually showing you. Is the market genuinely giving you the signs that it's ready to go up or down yet? If not, change your directional bias and get rid of that ego. That's probably the best nugget that I can kind of start with right now, with that, with a little nugget for trading psychology, let's say. But let's go ahead and jump straight into breaking down this kind of currency pair for me to be able to show you some screenshots that we have taken, just about when we executed the trade. So I'm going to be switching between forex.com as a data feed and FXCM, just because I didn't want to have all of this analysis on the same screen, on the same chart. It would have been too busy. But the kind of breakdown for AUDCAD started about a month ago, if I want to be completely honest, where towards end of June was where we were managing to kind of actually identify this massive reaccumulation that's kind of happening in the market. I know I've said distribution trading range over there, and that's a lower time frame distribution, which we'll come back to a little bit later, right? But this was the general reaccumulation phase that AUDCAD went through on the hourly or the 4 hour. You can see that a little bit more clear, and from there is what we took off. So the trade was actually based on, or is based on, a reaccumulation that kind of took place in the market. But let's drop down to 30 minutes and start from that very first distribution trading range that we actually ended up getting for AUDCAD. There we go. Don't know why that went slow for a little while, but check this out. That is where this kind of distribution trading range actually started. We had this markup phase where the market had a rally, and from there it went to this distribution phase. The preliminary supply and bias climax that I've identified, that's for the reaccumulation, not to be mistaken with what I'm going to go through right now. But what this market ended up creating is your bias climax, automatic reaction, secondary test, and this could either be looked at as a potential sign of weakness or another form of secondary test of the lows. There's a lot of different ways to kind of look at Wyckoff schematics, so you can even identify that as your bias climax up there, and all the way down here as a sign of weakness, right? Bias climax with a sign of weakness, testing those institutional candles, testing the ranges, so all of these are secondary tests. The market comes up and creates that UT, the up thrust, Following this, it creates a UTAD. Now, if you are listening to these random, phrases and letters that are coming out of my mouth right now, and you're not understanding what I'm talking about, don't worry. This is the Wyckoff kind of schematic that we are looking at, the Wyckoff breakdown that helps you understand where the big big market controllers, I'm going to say, accumulate and distribute their positions. So instead of us constantly having the mindset that we're trading against the banks, we are able to see levels of supply and demand, levels of distribution and accumulation, and that the market has created because of the institution's massive orders, and potentially take similar trades to them, or at least have a higher accuracy with the trades that we take, right? That was the general distribution that we formed over here. And again, if this is not making sense, go back to the YouTube channel, watch the previous 4 videos that I have posted before this video. In the Euro AUD example, GBP USD, NZD USD, NZD CAD, or Euro USD. All of these videos I have posted previously, and there's good information about accumulation, distribution, reaccumulation, redistribution, all of these stuff. Now, if that is meant to be my trading range, for those of you who understand Wyckoff in a little bit more detail, if that is going to be the distribution in the market, then we expect distribution after. Right? That would be a move that after that, UTAD, the upthrust after distribution, which is all the way up here, after this we would be expecting this to start to come down, but that didn't really happen. From there, we started to enter another reaccumulation phase, and it was a little bit difficult to see this until we started to form elements of that shakeout over there. Elements of the lows being constantly manipulated, a creek being created, but all this market did is from that range. If I go on a higher time frame, you can see it's easier. From that UTAD that it created, in essence, all the way up there, and I'm going to remove all of these points for that initial distribution just to make it a little bit cleaner. From there, we move to creating so many lows and manipulating them one by one. Manipulating them one by one. Even before this, we would create lows and absolutely take them. After this, multiple equal lows or just lows in the market have been created. And one by one, as you can see, that low manipulated, this low manipulated, this low at the end manipulated, one by one. Even this final low over here, that's another shakeout, right? The market is constantly manipulating the lows. And after the manipulation of the lows, we break structure to the upside, which is this move to the upside. And what have I said in the previous videos about the definition of a potential accumulation is a manipulation of the lows and a break of structure to the upside. Manipulation of the lows, break a structure to the upside. Now, in this entire accumulation phase, this is my creek. That's the line connecting the highs. But more than anything else, if you're finding it difficult to know exactly what a creek is, you can go based on a break of structure. That was the level, in a sense, a line, let's say, a dynamic potential resistance that's holding the market below it. And that is with the action of JAC, jumping across that creek, moving above that creek. Or, in other words, that's our break of structure to the upside, where we have challenged all of these previous structure points and we have introduced probably the first initial buy positions into the market. Maybe, or that's the rally to the upside that's kind of starting this whole potential reaccumulation. That's our jump across that creek. Upon that retracement, after we form that final shakeout, we do come back for a secondary test of that final shakeout, or again, even if you want to label that as your shakeout or your final spring, it really doesn't matter. It's the same analogy, same idea behind it. Within that process, we actually created another accumulation in the market. This is our next accumulation. And again, please understand this. This is so crucial and important for your entire trading career. Markets are fractal. Within a reaccumulation, you can find multiple accumulations. Within an accumulation, you might be able to find another reaccumulation and another accumulation and another distribution. There are these fractal, geometry, or the fractal nature of the market, as we say, is definitely valid. It's a very good point to start to learn and master to be able to apply to your trades. Because that is where, upon this secondary test of that shakeout or the final spring, we created another accumulation trading range. Right there. From our preliminary supply to our seller's climax, automatic rally, secondary test, sign of strength, secondary test in phase B, and your spring to the downside. So that accumulation has actually already been formed. Seller's climax, automatic rally, secondary test, sign of strength, secondary test in phase B, spring. That indeed is our accumulation being formed within the range of a larger reaccumulation. From there is where we start to take off. I didn't look too much into everything that's been happening in the middle, but I will leave this for you guys to do your own research, for example, and see what took place in this range of the market, let's say. Because that's probably another reaccumulation before this market went higher. What took place over there? Be able to break these type of scenarios down on your own and study it independently on your own, right? I'm not going to go into too much detail about this. I haven't even, that hasn't even been my major focus. But the first thing that we identified for AUDCAD is this zone up here. That is that level in the market. That is my high. That's the resistance. That's where I want to see a manipulation of, or rather a breaker structure, not manipulation, right? A break above that level. That is what makes this whole trading range, or this whole accumulation or reaccumulation, valid. Again, we've discussed this in previous videos. What makes an accumulation or distribution valid is a break of structure in the desired direction. If this is a reaccumulation, the desired direction is to the upside, and a break of structure will be a break of structure to the upside of this level. Okay, so once we started to break this structure to the upside, let's have a look at the 2-hour time frame now. 2-hour, 4-hour, it doesn't make a difference. I've written H4 point of interest over there, but it was the same type of idea. As soon as we started to come and break above this trading range, this is where that could be your sign of strength. That is where the market started to create higher points than before, spending time on the other side of the zone. So it's not a quick manipulation and back down. It's definitely a breaker structure in the desired direction, right? And after this, we start to trend properly. Whatever my previous higher high was, it doesn't matter. That is my next important higher high, right? Before all of this stuff started to happen, that point would have been the most significant higher high. That was the final higher high that the market created. Whether that would be your previous higher high or that one, it really doesn't matter. That's where we rallied to the upside properly. So in essence, creating maybe that typical kind of bullish structure that we would want to see before executing these trades. We rally to the upside, we break above all of this little range that the market creates before breaking to the upside, and check this. When we retrace back down, we actually create another accumulation trading range, which is what I have marked up over here. This is another accumulation trading range. Again, many different ways to look at this accumulation, whether you want to look at that as your preliminary supply or whether you want to look at that as your buyer's climax or seller's climax. It doesn't really make a difference. The bottom line is over here, we have found a climax. We have, rallied to an extent to the upside, manipulating the lows, whether you want to call that just a manipulation or a secondary test in phase B, and a spring, which is over here. It doesn't make the biggest difference in the structure of the market. The point is that's an accumulation, right? We're accumulating and we're breaking above our trading range, above our accumulation range, right? So that's the accumulation that we got over here. From then, we started to create a low, high, higher low, higher high, higher low, higher high. Now this was indeed a trade that we were looking at over the weekend. This was about 2 weeks ago. So 2 weekends ago, give or take. Currently it's Thursday, 30th of July at just after 10 p.m. UK time. So new daily candles have actually just been open. But that was this was a trade scenario for 2 weeks ago. 2 weeks ago, we were here in the market. And for those of you who plug into our weekly market breakdowns, we do market breakdowns every Sunday. We break down charts for the week ahead. Then this was actually a scenario that we looked at over the weekend. I don't remember the exact time frame I was looking at. I haven't written it as well, but that was the exact buy level that we identified for the market. The only thing is the market ended up opening at that exact level, which was really annoying. That was a no trade scenario over there. I expected this market to be a little bit slow throughout the night and then come down a little bit after for us to be able to pull these triggers and actually get in AUDCAD positions at that level. That would be where we are definitely on the right side of that structure, taking that to the upside after an accumulation. What ended up happening is the market opened at that level. So that was a no trade scenario. We tested that multiple times, but we didn't get in any of these positions. So that was the initial, trade idea that we had for AUDCAD, which was a no trade scenario. Now, these entries would have been over here. Once we started to take off, and this is where 4-hour and 2-hour time frame comes in. So as you can see over there, I've written H4 point of interest. That's the 4-hour point of interest. And the reason why I've identified this specific level is because that is my institutional candle. That's my 4-hour sell before you buy. You should be able to start to identify these a lot easier now. before this market, look at the structure of the market as well, right? That was my higher high, so the market broke that structure to the upside. But before it did that, it actually created a sell before you buy candle right over there. That is our institutional candle. That is the candle that we can actually target. That's where potentially a lot of demand will be introduced to the market for this to rally and take off, exactly like it has right now. So initially, that was the level that we were looking at. On the 2-hour time frame, it looked a little bit nicer. That's the 2-hour sell before you buy candle. And this was, not this one, I think. I don't think actually I took a screenshot of that. But anyway, that was that 2-hour level that we were looking at for those potential buy scenarios, right? Actually, yeah, this is the one. That's the same one. AUDCAD on the 2-hour time frame, 120 minutes. This picture was taken on 24th of July at just after 2 p.m. British Summer Time, right? 24th of July, which is around here. That's it. That's our 10 a.m. candle to 2 p.m. So that is exactly where this picture was taken. And the level that I have identified over there is the 50% of this 2-hour sell before you buy. This is where I'm going to move to forex.com. The 50% of that 2-hour sell before you buy is that blue line for me. Over there is orange. I just changed it to blue just to make it easier to see those lower time frame entries. That blue line is the 50% of the body of that sell before you buy candle. So that was initially where I wanted to execute my orders. And I had one entry over there as well with risk just below as well, which is about a 10 pip stop loss, a total of a 1 to 42 risk to reward ratio for this one. But majorly, I'm going to actually get rid of this position right now because the major focus is going to be the second positions that were executed, right? Now, that 2-hour sell before you buy. So just after 2 p.m. UK time on 24th of July, which if I zoom into 1-hour time frame, you'll be able to see is this candle over there. So just before we started to take off properly. Now, what I actually identified within that 2-hour range is this. We have our open price identified, the 50% and the open price of that candle, which will be around there, or the wick of it if you want to take that into account, whichever. But that is that general range, that's my execution range, right? Either the open price or the 50% of that institutional candle. So that's where I can now start to look at lower time frames to see if these entries are being complemented by the lower time frame. Again, I'm going to put this in replay mode just so we can zoom in a little bit easier. That 2-hour sell before you buy on the 1-hour time frame, that is indeed complemented by this imbalance. This specific breakdown took me all the way down to the 5-minute. So I'm going to skip all of these time frames in between and go straight down to the 5-minute time frame. And the reason behind that is very, very simple. And this is what we saw on the 5-minute time frame over there, right? On the 5-minute time frame, at the same level as the 50% of that 2-hour sell before you buy, look at what we have. We've got another institutional candle. We've got another pause in price, another rally-based rally, whatever you want to call it. There's many different names for the same concept over there, right? But the point is that is a reaccumulation on a much lower time frame. That is an area of demand. That is actually a candle that I can go ahead and execute these trades based on. So we marked up that 50% of that specific candle itself as well. That's what I show on this second picture over here. The 50% of it. The red line is the stop loss of that specific candle, based on that specific candle being all the way down here. So as you can imagine, these secondary entry opportunities based on this 5-minute candle were also valid to take, right? So that is where you were able to see that was our entry at the 50% of that candle, the risk below, that was the entry over there, right? So I'm just going to be speaking about this currently floating at, well, I can't even see the currently floating. The final risk reward is over a 1 to 300 actually. I'll speak about that as well. But this trade currently is floating at something like a 1 to 130 if I'm not mistaken, right? But that was the entry with that stop loss just below that low. That's enough for me to want to take my trades based on that, right? And this is... yeah, that's where we were, right? This is now on the 15-minute time frame, again taken at 7 minutes past 2 p.m. on the same day, so a couple of minutes after I took the previous picture, which means we are, as you can see in this picture, just a little bit above the exact entry, right? So that's that previous before and after kind of picture. Now, I still need to speak about that reaccumulation. Ooh, there's a lot of nuggets to go through. But before we get into exactly what happened after, let's quickly summarize what we went through. We went through a zone of distribution at the very beginning, which is over here. That's our zone of distribution over there, right? this distribution then turning into this reaccumulation, breaking the range to the upside, starting to trend to the upside, identifying the final institutional candle and perfecting now on the 5-minute time frame for those entries. Now check this out. Going back to, let's say, 5-minute time frame or 15-minute time frame, I think you can see it there as well. Look at what we actually formed before we came into this level. However you want to identify this, this is another potential accumulation actually being formed, the market rounding off before it goes higher. In the previous videos, we've always spoken about how we don't want to see the market move impulsively in the opposite direction to our desired zone. Meaning what? If this market started to come down extremely strong to that desired level, I would not want to buy against the dominant energy in the market. I don't want to do that. I want to stay on the right side of the trend, and I want to stay on the right side of the order flow of the market, right? Now, whether you want to look at that as your preliminary supply or seller's climax or whatever, it really doesn't make a difference. But the point is, that could be your preliminary supply, that could be your seller's climax, and that could be your sign of strength, secondary test in phase B, and your spring. Element of creek over here, or that break of structure to the upside as well. So that is actually your accumulation range being formed right before those entries. You can even consider that your preliminary supply, seller's climax. These could all be your secondary tests in the market, secondary test in phase B, and your final manipulation being that spring. Again, different ways to look at the same accumulation, but the bottom line is it is indeed an accumulation. What we can agree on is that's an accumulation, and that's our creek in the market. A line connecting the highs, let's say before that spring happens, jump across that creek or that break of structure to the upside, right? So even to reconfirm these trades, we go back to what I mentioned earlier in regards to the market. Well, listen to the markets instead of trying to force the markets to go in your desired direction. We're always going to pay attention to what the markets actually show us, right? Now, let me bring this back to here and start to have a look at what started to kind of form once we started to take off, right? One scenario that we were speaking out actually over the weekend a few days ago was another potential, well, knowing how and when to buy into AUDCAD. And if I'm not mistaken, I drew this on FOREX, FXCM. Yeah, right over here. So this was actually an analysis over the weekend where when we were doing the market outlook over the weekend, again, some of you who plugged into that call would remember this. The market did gap down again. That wasn't anything huge for us at all. It was still within the range, so that didn't really matter. But what we looked at over the weekend was this reversal zone, or that structure in the market, whatever you want to call it, right? That is a very, very crucial structure point in the market. So if we are going to break above that, probably we'll take off. We'll go higher. So that was another level that we identified over the weekend, and we said if we start to break above that, look for the buy positions. So for whoever who managed to catch some of these trades to the upside as well, not necessarily the same entries that was from the week before, but let's say some type of re-entries, and that's amazing. But let's go back to forex.com. Once we started to take off that level, once we started to take off of that entry, look at what the market always creates. The markets will always tell you when it's ready to go in a desired direction. A lot of you ask the question of, how do you know when to get out, or how long to keep a trade open, and this and that. The bottom line is, don't worry too much about that. Just spend so much time studying the market in so much great detail that you're not even worried about the emotional aspect of things. Your skill will be able to help you to identify which levels to close your positions at, or why you should even keep positions open for that matter, right? What happened in this specific range on the 15-minute time frame once we took off is we created equal lows and manipulated them. It couldn't be any more perfect from an institutional standpoint. That again, we are manipulating these lows and breaking structure to the upside. What does that mean? We are actually in another potential reaccumulation phase over here. But more than anything else, it's a matter of these equal lows being manipulated and the market absolutely taking off straight after that. Powerful. I haven't looked at this specific range, but again, study this in your own time. To me, this looks like maybe a 5-minute, 3-minute, or a 1-minute accumulation. Mark this up on your own and see if I am right or wrong. I haven't looked at it. I'm not going to open it right now either, but that looks like a lower time frame accumulation. All of these stuff goes hand in hand. Spend time mastering the craft is the most important thing. Okay? Now, once we break that structure and range to the upside, the market enters another almost perfect reaccumulation phase. And that's that final screenshot that I took earlier today, actually, right? So this was at 3:23 p.m. UK time, July the 30th, so today. which was around here, somewhere around here, right? That's a 3 p.m. candle, right around here, before we had that final move to the upside as well. Within this range, all I've said is that that's a reaccumulation range that the market has created. I'm not going to identify each and every single point of these. Go and watch the previous video on Euro USD for a breakdown of one scenario of reaccumulation. There's about 4 different scenarios for reaccumulation alone, right? So it could be a lot of different things. That's why I say it's crucial to practice and learn properly. But in general, this was another reaccumulation that the market started to create. At the beginning, this could have been even mistaken with a distribution, similar to the 4-hour picture that I showed you for AUDCAD, right? But what ended up happening even in this scenario is a manipulation of those lows, constant manipulation of that lows. I'm not going to draw all the other lows that have been manipulated, but you can see many, many, many different ones. Manipulation of the lows and a break of structure to the upside. This was taken on the 10-minute time frame, so let's zoom into 10-minute. Manipulation of the lows and a break of that structure to the upside. This line over here could be your creek, quote-unquote creek, and that's your jump across that creek. But in other words, what started to happen is the market started to range, manipulate the lows, break structure to the upside, and off it goes. Now, where's my final targets for this? The final targets coming from higher time frames, daily and weekly. But the point behind this entire trade is we had such an impulsive move on the weekly time frame to the downside and a bounce right back. That tells me that we could actually be clearing a lot of weekly highs the same way we have been. All of these highs over here, previous highs that I'm not even going to identify them, all of these highs, they're being taken one by one. And as this market goes higher and higher, more and more of these highs are being violated to the upside. So my personal profits are based on the daily and the weekly time frame, both of these, but more than anything else, it's a matter of seeing anything below this zone has practically been taken care of. Whatever institutional candle or imbalance that we had over there most likely got taken care of by that. That's a 786 retracement, right? That's a 78% retracement of that move to the downside that we had over here. So I can consider up here we haven't got any more institutional candles or imbalance or whatever that I can kind of go based on. So my final profits are coming just at that high, simply because it looks like we have a buy before you sell action over here. Buy before you sell action over there with imbalance straight after that. So I want to take my final profits before that, which is a total for this specific position. It's actually a total of a 1 to 334 risk to reward ratio from what I remember. 1 to 334 risk to reward. And that's if these trades kind of come all the way and hit all the take profits, right? But now here's where a big part of trade management comes into play. This trade has already hit a 1 to 130 risk to reward ratio. That's what why I have this over here, right? That's a 1 to 130 that's already been tapped off. So you can imagine however much, whatever percentage, whatever units you were risking, the potential reward, if all those positions were kept open, would have been 130 times more, which is crazy to think of, but it's true, right? Now here's the thing: I'm not planning to keep all of my positions open for a 1 to 130, and I don't even have all of the positions open right now. We take partials along the way, we break even positions, we close, we take our money off the market, we knowing this can reverse right now. But the bottom line is, this specific trade, my current mentality, or anyone's mentality for that matter, should be similar to not should be, but could be similar to what I'm about to say. Whether or not this trade goes up or down, I've made my money from it already, because a lot of the positions are closed. We've taken a lot of partials, right? So if this comes and reverses back down, it's going to take me out at break even. It's still a win trade. Alternatively, if it goes higher and smashes that 1 to 300 risk to reward ratio, then amazing. The positions that I have left open will run all the way up until then. But it's okay. We've already reached a very decent risk to reward ratio. So indeed, we can take positions off the table. I don't need to keep all of my positions running. I will secure my money and keep minor positions running. This market can literally do whatever it wants. And that, traders, is a complete and hopefully a very good educational breakdown of AUDCAD. I forgot to give a disclaimer at the start of the video, so it's going to have to be at the end. But as I always have said in the previous videos, anything you see on this video, in this channel for that matter, is indeed for educational purposes and by no means requires any action, right? This is just for educational purposes, for you to be able to study this a little bit more in your own time, for you to be able to identify these type of trades, master them, put those hours, thousands of hours, tens of thousands of hours of in, whatever it needs to be, right? And master this because it's worth it. Let me put it that way. It's definitely worth it. So everything's for educational purposes. Understand that this is this is an investment. At the end of the day, trading in general is a form of investment. So it's risky. So your capital is indeed at risk when you execute. So make sure to kind of guard that, work on your psychology a lot. But with that being said, I hope this video was educational to the point that is helping you understand these type of moves easier. Start to look at these type of trades a little bit more often. If you have any questions, feel free to reach out to me on my Instagram. I'd be more than happy to answer any questions that you may have. Have a look at some similar scenarios that have happened in the market in the past to be able to identify some trades that have happened in the past. Do make sure to subscribe to get a notification whenever other videos are posted. But with that being said, make sure to study these in great detail. Keep on top of the hard work. Put the hours in. Don't get demotivated. Keep going. Keep being consistent with everything that you do. Surround yourself with the people that you want to become, let's say. And let's elevate and let's catch some pips. Let's go.